Hi, everyone. Welcome back to episode number 12 of Live Laugh Loans. I'm Myra Talley.
And I'm Shelly Panzarella.
Happy New Year!
Happy New Year! Episode 12.
Yay!
Yay!
We got so much to talk about this episode, but I think we want to start with a recap.
All right. Yes, let's jump into the recap of 2022. It's crazy to think that we are already the second week into 2023, but last year, let's start off with, since we started off our podcast with rates, let's talk about rates from last year.
Yeah, last year in January, average rate was like 3.22.
That's crazy.
Compared to the rates today are, close to 6.5%.
Yeah. And we didn't see coming out of the end of the year, 6.5%. We've been holding pretty steady on that. I know we're only 2 weeks into the beginning of the year, but last year when we started, do you remember it was like 3.22 and then it was boom, rates were just, all of a sudden we're getting into the fours almost by the end of January.
That's the thing. Since last year, they literally, like you said, 3.22, 4%, 4.5%. It's been so volatile.
Yeah.
And they've gone up and down depending on the day, the week. But I want to say the last two episodes that we've done here, we've been level at 6.5.
Yeah, well, that was after November 10th, right?
Yeah.
When we first saw that 0.5 point dip. So we went from the 7s into really the 6.5. Now we have seen in the 2 months since November, it has gone up a little bit, but it's come back down, which I think we'll probably see as we head into the new year. We'll see some of that, but we'll talk about our predictions at the end of the show. So make sure you stay tuned to that. Everybody was talking about the housing correction, housing crash, or housing crisis. Did we see that in sales prices?
It's kind of neat what we saw.
Yeah. We reported, so specifically here in Las Vegas, LVR reported December of 2021, median sales prices were $425. And where are they today? Or where were they reported for last month?
They were at $425.
What? So if we had seen the crash or the correction, would we have stayed the same? No. Right? We would have seen even a little bit of a dip. So that's reassuring to know that. And even in some areas of Las Vegas, they actually saw, even though it's a small percent increase, they saw a median sales price increase. So that's reassuring to know that last year, although there was a lot of talk about it being a huge correction, that we remain the same.
What did increase, though, was seller concessions.
Yes. Yeah, that was that definitely shifted. And I don't know if you call that an adjustment from a seller's market to a buyer's market, but definitely we saw a lot more of seller contributions, which, there was a news article by Redfin that was posted that talked about 40%. So 2 in every 5 sellers was offering a seller contribution on their contracts.
Right.
And we're seeing that today. What can we use a seller contribution for now? What are you seeing?
We can use it to buy down the interest rate. We can do 2-1 buy down, 3-2-1 buy down. Many different options that we've actually spoken about on here before.
Yep.
That can lower your interest rate, pay your closing cost.
Yeah. Sales price reduction. And I think that was the first step. We started to see price reductions. And then people were cluing into well, if the seller is actually willing to reduce the sales price, why don't we see what they could do, see if it's a better bang for the buck, so to speak, for a buyer to use that difference on, like you mentioned, a permanent buy down, interest rate reduction, or the 2-1 temporary buy down or 3-2-1 buy down.
Correct.
Which was very unique in the market last year.
Yeah, and that is also on another article that came out. This is kind of ties with it that today's mortgage payments are 64% higher than they were in 2021.
Yeah. And that is, the sales price, even though the sales price remained the same, because we did see it go up in the year and it came back down a little bit, right? But year over year from December 21 to 22, we are exactly the same, but it's because of the interest rates.
Right.
And
again, with the buy down. So if somebody has a 6.5% interest rate today and they use a 2-1 buy down, they can technically start that first year at a 4.5% interest rate.
Yeah. And I think that's something to think about too, because, we'll talk about it again in our predictions at the end of the show. So make sure you stay tuned to the end of the show. But there are a lot of economists and there's projections that rates are going to go down. So one of the great benefits of using that temporary buy down, you start off at that 4.5% rate as just an example. If rates drop down to say that to 4.5, maybe 5s, and it makes sense for you to refinance, what you set aside inside of that escrow account, if you still have a balance left, that actually would come back to you within the first, 2 to 3 years, depending on what that temporary buy down looks like. So you have an opportunity to use those same funds of when you bought the home to help you to refinance down the road if and when rates decrease.
Right.
So
And to get that reduced permanently.
Right. Which I think that's also a misconception, because you're seeing a lot of people advertise that first payment, and they're not understanding that this is a temporary buy down. So as you mentioned, let's say you're doing that 2-1 buy down, your first payment or first interest rate is 4.5
for the first year.
For the first year. And then the second year is the
5.5.
Right.
And then the third and final, or third year through 30, will be that 6.5 if you do nothing with your mortgage.
Right.
It is still fixed rate. It doesn't, it's not going to vary aside from those first, 2-3 years.
Yeah. Yeah. So I think that, and talking through the market rate and Fed fund rates, Jerome Powell, who is our chairman for the Federal Reserve, is speaking February 1st. So the last time he spoke was middle of December, actually after our last episode.
Right.
And he indicated that he raised the rates that time to half or 50 bips. And so they're going to continue to do it, but maybe not at that same pace as they did last year.
Yeah.
So the first meeting of the year is going to be February 1st. What are your predictions? Or should we jump into predictions now?
Sure, let's do it.
Okay. So 2023 predictions. So he's speaking February 1st. What do you think the prediction is on what he will do with the Fed fund rates?
I think they are going to announce another increase. I do think it'll be a little bit less how they had mentioned in December. So maybe a quarter point is, from what I hear. And I think that's pretty, believable.
Yeah, reasonable too. I think he did comment that I think they spoke again sometime between December to now, and they discussed the fact that they still need to see a shift in the inflation, although we're seeing it correct itself now and start to come down. And I think they probably realized how quick that was and the impact it's having on the economy today, but he still intends to raise it. So I was thinking half. You think 25 bips? Okay, so I'm thinking half. So Myra's going with a quarter. I'm going with a half. We'll see what that looks like on our next episode or after they talk in February. What about interest rates in general? What's your prediction on where we're going to end the year in 2023?
I think we're going to end the year, I would say 5s. Maybe we'll see, higher 4s if we're lucky.
Ooh, I like that. That would be nice. That's probably another $150 to $200, depending on sales price.
Yeah.
Benefit. Actually, probably more, almost $500 if you get into the high 4s.
Yeah.
For interest rates. I would say by the end of the year, so if we're at 6.5 today, January, I think we'll be in that 5s. I would love to say we will be in the 4s. You could buy down to the 4s, but at par pricing for us, I think we will be in that 5% range. So we'll see. So I will go at 5.5. I'll go a full point lower. So you're saying high 4s, like 4.875?
I would say lower 5s.
Okay.
We're going to see some high 4s.
Okay, so we're still on the same page, pretty close on that. We'll see whose prediction comes out. What else? What about sales price prediction? Where do you think that's going to be?
That one's a tougher one. I don't know.
So let's say we start out at 425 now.
I would say it's going to stay roughly average sales price. I don't know. That's a tough one for me to guess. I would say we're probably going to stay somewhere in that. I don't think it's going to change too much.
You don't think we're going to landslide like everybody thinks?
No, I mean, if it does change, maybe 400 if we do see a decrease. I don't see that's changing so much more. I can see that there could be a little bit of a decrease just because now, some comparables will come out. They're not going to be as high because now they're not getting above list price. So if we do go down, I still say we're going to be in the neighborhood of 400,000.
425. So I think that if we get into like the rates that you're saying, I believe that will then flip everything back into the opposite direction. That I think we're going to have more demand again for home prices because prices are going to become a little bit more affordable, especially because rates are going to be rates will be decreasing, let's just say even into the 5% range. That's going to create more of that seller's market again, and you might start to see sales price.
That's very true. Good point, because I do see a lot of buyers on the sidelines right now. They're just trying to time the market, and they're waiting to see when they jump in. Some are jumping in just because I think they're stomaching now, like the interest rates are not so foreign as they were, just 6 months ago.
Yeah.
But I do believe that it is, like you said, can create that. But even just over the last few months, don't we have less inventory?
Yeah. Well, and some of that is seasonal, right? So seasonality around that. But I think there's also some sellers who like have that fear of missing out, and so they're just like, okay, I'm just going to pull my house off the market.
Yeah.
Then some who are just not pulling the house off the market because it is the winter season, so to speak. So let's just say that happens. If rates continue to go down, and then the market you're starting to hear multiple offers, which we've had a couple of contracts go in, and it's a multiple offer situation today, and at various sales prices. Like, it was multiple offers in that 200 to 300 range. I'm seeing it at 400. You did an open house right this weekend, and what was the sales price of that home?
It was like 750.
750, and you're thinking potentially 4 offers could come out of that.
Yeah, the one thing that did, of the 4 potential offers that were going to come in this weekend, is a lot of them were coming in contingent. And so in this seller's case, they're actually relocating to another state. So they're trying to sell right away. So contingent, they don't know how long that other home is going to sit on the market.
Yeah.
Do you happen to know what's the average days on the market?
I don't have that card.
I don't know.
I don't know what I think average days on market I know that it's increased. I want to say it's like in the 30 to 40 range.
Yeah, that's what I thought too. But back when homes were sitting, it was almost like you had to list your home first. It was so hard to time it.
Yeah.
And now it's hard, but the opposite way.
Because you've got people who are relocating out, or?
Well, and that specific buyer, they're relocating out, so they're trying to get somebody to buy their home so that they can purchase a home over there.
Yeah, I hear what you're saying, because we actually have a client today that he has been looking for a home. He's afraid to put in a contract to buy a home because his home has also been on the market waiting. So he's afraid to go contingent because, to your point, he'll be carrying both mortgages, and quite frankly, he can't qualify for both mortgages. So because he's VA, he has to sell his current home to purchase the new home.
So it's almost like back in the days, right? You wait to go into contract on your current home. Once you're in contract, then you fast forward and find that perfect home, because there's so many that are sitting waiting to be sold. Yeah.
And that definitely wasn't the case in end of 21, 21 in general, but beginning of 2022, you couldn't do contingent contracts at the time, right? You pretty much had to have that home closed, sold, and you were renting back or, renting an apartment or whatever until you found another home.
Yeah. And I think nowadays with the sellers, if they would be open to contingent offers as long as they knew that your home was in contract already.
Correct. Yeah. Which definitely goes back to that seller contribution, flexibility now for the buyers today, which we didn't see the beginning of 2022. Love it. So those are great predictions there. Let us know what you're predicting for 2023. If you're a homeowner or you're a buyer looking to buy, make sure that you get with Myra and us to talk about what it's going to look like as far as rates and preparing you to purchase. If you're a homeowner today, one thing we want to talk about is the taxes, right? So this is tax season. End of the year, we're going to start, end of the month. We'll start to get all of the W-2s and the 1099s and the 1098s for mortgages. So specifically, if you own a home, if you purchased last year, if you refinanced last year, you definitely have an opportunity to take advantage of using the discount points and some of the property taxes and such and interest as a tax incentive. Also mortgage interest.
Correct.
Right? That's year to year that you can take advantage of that. But you definitely want to consult your CPA or tax preparer to see if it is something that you can actually take advantage of. But it's ultimately property taxes you can write off.
Interest.
Mortgage interest. If you paid discount points on the purchase or refinance last year, you can use that. And then mortgage insurance too. Depending on what your income limit is or income amount is for the year, that is something that you can actually use as a tax incentive or tax write-off for you. So make sure if you did close out, excuse me, make sure that you're looking out for your 1099 if this is something that you have purchased a home last year or you own a home today. And then if you did buy, there's something called the settlement statement that you want to get. If you don't have it, most of your lenders can send it to you, or your title company can send that over to you. I know we always are prepared for it every single January that we'll send it out to our clients who closed with us last year. So definitely something to send in to your CPA or tax preparer.
Yep.
So New Year's, what about do you have New Year's goals? Everybody makes a New Year's resolution. Have you made one for this year? Or you probably already made a goal from 2020?
I would say it's going to be very common to a lot of people's goals, and just a healthier lifestyle.
Yeah.
For my personal goal. I feel like a lot of times people start January and they say, they have a deadline. This is what I want in 30 days, 60 days. To me, it's more just, I'm not in a rush to do it. It's like, I want to take the whole year and just create a different lifestyle, not just, hey, my goal is to lose X amount of pounds. I really want to find alternate recipes. So if my favorite, dish is a pasta dish, how else can I make it to taste the same but using healthier ingredients?
That's cool. I like that. So the idea of sustainability too, right? And when you talk about lifestyle, because I agree with you, that's most people are going to say, New Year's Eve, they make their New Year's resolution, and then it's gone. I mean, looking at the gym specifically, so New Year's, 1/1, we walked in, there was nobody there. January 2nd, 3rd, it was packed. Like you had to literally put your water bottle down and say, I got next, for the equipment, which is horrible. Within probably that week, by the end of the week, it was back to normal, which was faster, which is crazy because we actually have National Quitters Day is this 13th, Friday the 13th. So they already celebrate the day, or they're already preparing for everybody to basically quit.
Yeah.
So, but if you're doing something like a lifestyle type of change.
And just like a lot of people too, they do dry January.
Yeah.
And I normally hop on that train and I say, hey, let's do dry January. I'm not doing that. My whole idea is just to reduce. And if I hold back for 30 days, on that 31st day,
you're like, Myra's going to be gone.
Overindulge. And that's not what I'm creating. I want to create something that's sustainable that I can go. So if I feel like having a glass of wine for dinner, I'm going to have that. But if I keep from it, it's going to make me want it even more.
Yeah, and I think that's a great point in a lot of the things that we do when we pull away from certain things and all of a sudden it's something that we want more, which would be the craziest thing, right?
Yes.
Because I usually do Whole30 every January. This is the first year I haven't done Whole30, but what I am doing is paying more attention to my calorie counting, my macro, so to speak. So trying to eat as much protein as possible versus the carbs and the sugars, but I can still have it, right, in moderation. And alcohol, which was the one thing that I eliminated. And honestly, it was even sugars. Like they were strict. Like you couldn't have sugars. You could only have natural sugars, which were only in the form of like dates. I remember buying tons of dates in January, the month of January. So
that's fun.
Yeah, good fun. So let us know what your New Year's goals are. If this is already past January 13th when we've rolled this, hopefully you didn't quit. But if you need help getting back on the wagon, we are here to help you for that. But what else do we have?
I think that's all we have for this episode.
Yeah. Action-packed episodes. So make sure you stay tuned. We're going to be doing this twice a month. It's going to be the second and fourth month, aired on the second and fourth month, and also pay attention because we are going to be trying to come live as well. We can interact with you as our audience. So make sure that you like, subscribe, smash that notification button for our next episode. And with that, it's a wrap.
That's a wrap.